Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by IMI Global, third-party verification and value-added services you can trust. The U.S. dollar index is on pace for its highest weekly gain in 38 weeks after 3 days of sharp increases, Wednesday through Friday. The move began mid-week as Federal Reserve policymakers left benchmark interest rates near zero, but did signal a potential for rate increases in 2023. Weekly closing prices are the strongest since March, a time when the Fed had previously signaled no rate hikes until 2024. The dollar index represents a value of U.S. currency against a basket of foreign countries. 58% is weighted against the euro. More importantly, the U.S. dollar index is both a loose indicator of U.S. economic outcomes and a key factor in measuring demand for U.S. exported goods. As the U.S. dollar builds strength, goods sold in U.S. dollar denomination will get more expensive to a country importing those goods. A stronger dollar means an importing country is losing value on the exchange rate. The U.S. is a major importer overall, with net imports valued at roughly $75 billion in March, the widest trade deficit in U.S. history. For agricultural products, however, the U.S. remains a net exporter, with first quarter 2021 net ag exports averaging $1.8 billion per month. Sudden increases in the U.S. dollar index can mean a sudden change in price competition for U.S. agricultural products, and markets tend to respond. Spot corn prices will finish the week more than 20 cents lower after a 40-cent drop on Thursday cannot be fully recovered in Friday's trade. Spot soybean futures had already traded lower for 5 consecutive days when daily prices moved beneath the 100-day moving average on Wednesday. Thursday's trade sent spot beans down another $1.18 per bushel. With spot corn futures at $6.60 per bushel and spot soybean futures at $14 per bushel, the soybean to corn ratio is below 2.25 today. A ratio this low has only been observed in 18 weeks since July of 2013, less than 5% of the time. Wheat prices were mixed across the commodity exchange, with Chicago and KC wheat trading lower 15 to 26 cents, while Minnesota wheat was up 7 cents per bushel. Spot cotton futures were lower by $2.23 this week, finishing just beneath $85 per pound. Volatility was not limited to ag markets. Gold futures fell more than 100 points, settling near $1,770 per troy ounce. Copper futures fell by nearly 10%, closing the week at $4.14 per pound. Live cattle futures were some of the only market winners this week after a better cash trade stimulated futures response. Moderate cash trade was seen in the South at mainly $122 per hundredweight, $2 better than last week. Fed cattle traded in the North at $124 per hundredweight live, with most just trade at $195 per hundredweight, $4 higher than last week. Thanks for watching. Remember to visit CattleFax.com, become a member, and see the latest market news and analysis.